Hello and welcome back to another episode of Markets in Turdmoil. We're finally back and the market has decided to poop its pants a little bit since it's a pretty amazing run since November. Now, same as the previous episodes, I'm going to help you make sense of what just happened in the past few weeks and also the possibilities of the market moving forward. So from this price action here, we see that SPY has dropped 15 bucks from the high in pretty fast action, and we didn't see much buying pressure during the intraday sessions, even with on Thursday some really strong action that were sold out later in the afternoon. We also see that the price is now below both the 14-day volume weighted average price as well as the 20-day SMA here, both of which are pretty bearish indicators, at least for the short term. As for price ranges, we closed right above the Bollinger Bands that pretty much encapsulate most of the price movements in a day, as well as having traded right to the bottom of Friday's lower Bollinger Band range. Now, this is pretty important because usually when prices go this low, they do tend to have some sort of buying pressure because, of course, this is a 2 times standard deviation away from the mean. Now, normally, if we don't have a continued downtrend, this area here would be the bottom because usually the Bollinger Band encapsulates most of the price movements. But if we have a continued downtrend, this expanding Bollinger Band range would mean that it would have more room to go down further. Now let's look at these levels. They're pretty important because of where Friday closed. First off, we have this red trend line here that I didn't just draw on. If you see my previous videos, this trend line has been here since for weeks and months now, essentially. And on Friday, we actually closed right on this trend line. We went below it, we tested it, and we rallied back up to close right back here. We also managed to close right at the 236 Fibonacci retracement here, which is also coincidentally intersects this trend line here. Now this is basically some very strong support, at least for this day. So this would be the sort of bullish thesis that this support will hold and we're going to bounce up higher. Now, another thing is to show why we closed here on Friday and didn't go any lower is because of the whole volume profile of the past 4 months. We see that the point of control here, the POC, is this purple line here where the most volume was traded in the past 4 months. That means that there was a lot of demand here from volume being traded just to have it burn through. So this was a very obvious place for the markets to bounce off, at least for an intraday session on Friday. Now, as for the indicators here, here's both the standard RSI that everyone looks at and the stochastic RSI that I also like to look at. Now, of course, the stochastic RSI here, we have the fast RSI versus the slow here that's still trending downwards from the highs back on Monday last week, and this needs to cross and turn around sometime next week for the markets to move back up. Now, of course, this means that it is very likely that we're going to see some more downward pressure before we're able to turn around at this point. Now, as for the 6-day RSI here, we see that the RSI has moved down from the overbought range here above 70 back down to almost 30, which is the oversold range. Now, I'm expecting the RSI to hit at least below 30 at this point, just because of the whole downtrend movement we see here before we see any upward movement. Now, basically, with that said, why we saw a lot of risk off in the past week was mainly because of the wackiness surrounding the whole saga with GameStop and AMC and all that. And basically, funds are looking just to see that it's a good point to take some risk off the table. Now, basically, from this point, what I see is that we could totally reach the next essentially average price here support, which is around 356 here, which is coincidentally also this high point 357 support from back in September. Now, what could make that happen? Well, we could see further risks in the next few days, basically from brokers limiting people from buying stocks, which of course, if there's no one to buy stocks, stocks can't go up and people can only sell stocks. And if there's further panic in that area, we're going to see further downward pressure in the markets. Now, with that said, there is some systemic risks with Robinhood right now, especially in how that they needed to borrow and open their $500 million line of credit, as well as accept $1 billion new dollars from investors. That's $1.5 billion. Even with that money, they're still limiting buying in their stocks, in 50 stocks, and that isn't just the so-called meme stocks. This also includes Starbucks and GM, pretty standard stocks for people to buy. Now, the problem with that is I don't think that this is directed, by Citadel or whatever, but it really shows that there is a liquidity problem under the hood at Robinhood. Now, I don't know exactly what the problem is, but of course, it's like a sick person. You can see the symptoms showing up, but you don't know what disease they have. So with that said, if Robinhood does go under, although I do think that the likely scenario that is that it survives, but if it does go under, that would create systemic risk across the entire market. Sort of like a mini Lehman event. Now, luckily, with the trillions of dollars in other funds in the markets that are actually long, things like AMC and GameStop and all that, Robinhood going down won't bring down the entire market, but, we'll see a 10 to 20% pullback. And of course, that brings us down all to 356 and this 356, 357 level. Before that, I don't think the markets would go straight down, but if we do go down, that would be a downside target. But before that hits, of course, there is more shorter term intermediate targets through the downside, which is of course this lower range, 364.8 here, and that would sort of be the next support. Below that, of course, is this level that I think would be eventually retested somewhere in the future. Now, with that said, I think this correction will probably last a few more days at this point. So, as always, and with even more emphasis at this point, stay safe out there.